Hi everyone, welcome back to my channel. Today's video is all about how to spot reversal patterns, specifically two patterns that are fairly easy to identify on the charts. So I'll go in depth about each one and I'll show the actual patterns in Thinkorswim. So first, I want to break down these two patterns you see here on the screen. Learning the morning star and evening star chart patterns is very beneficial because they're strong reversal signals that can help anticipate trend changes in the market. And I like trading these patterns because one, they're very obvious and they offer strong momentum signals when combined with open interest and volume. Now, the morning star signals the potential end of a downtrend and the start of a bullish reversal. On the other hand, the evening star suggests that there is an end to an uptrend and the beginning of a bearish reversal. So mastering these patterns allows you to manage your risks more effectively, and this helps to improve the overall decision making because you can recognize these formations to add depth to the trader technical analysis plan that you may have, and this also enhances both your timing and the profitability of your trades. So let me show you a specific example of these patterns in Thinkorswim. Alright, so y'all can see I have Amazon pulled up here, and this is from today, October 22nd, of course at the time of filming this. Now as mentioned, I want to go over the characteristics of a morning star so that you can actually see it on the chart, as it shows the end of a downtrend and the beginning of an uptrend. That way everyone can get a clear visual of what it looks like. So let me zoom it in so that you guys can get a full detailed breakdown. So specifically, I'm going to pay attention to these three candles here at 12:26, 12:28, and 12:30. So these three candles right here are what we're going to mainly pay attention to. Now, some may see this as a double bottom because you can see this candle here and this candle here at that 12:26. It does show you that indication of a double bottom. And it's important to note that a double bottom and a morning star can coexist. As a matter of fact, when they combine, it significantly boosts the reliability of a potential trend reversal. So that's a good thing to keep in mind. When you have double patterns, it's also going to give you that more realistic approach to understanding exactly what you're seeing on the chart, and it allows you to have further confirmation within your trade. So to focus here on this candle at 12:26, this is going to be the first candle we look at. This is a large red candle reflecting strong downward momentum and selling pressure, and it suggests that the bears are in control, of course, which pushes the price lower. Now, because this is a bearish candle indicating that downward momentum, in a typical Morningstar setup, this first candle confirms the existing downtrend. So this lets us know that the stock is trending downward. Even if it's just momentary, it's still going to show you that. Now, this second candle here is an indecision candle, and we can see that because it's a smaller body indicating less movement between the open and the close price, and this could either be red or green. In this case, it's a green candle. Now, with that being said, it's a small candle with a slight upward or downward movement, and this is going to be small because it's showing that the downward trend is the indecision on whether or not it's going to stay that way. Now, this candle is significant because it shows the middle ground, and that just means that the selling pressure has weakened and neither buyers nor sellers have strong control. Sometimes this candle may also be a doji, which further emphasizes the indecisive sentiment within the market. And a key element of the morning star is that the second candle often has a small gap down from the previous candle. But in intraday or tightly traded markets, this gap may not always be present. Now, this third candle here is going to be a bullish candle. This is going to signify that buyers have regained control. Now, the large bullish body confirms that the buying pressure is strong enough to reverse the prior downtrend, and the push upwards is confirming a potential trend reversal to continue. Now, this candle closes well into the body of the first one, as we can see here, further validating the shift in momentum. Now, the important thing to keep in mind is that the stronger and larger this candle is, the more reliable the pattern becomes. Now we see here, this isn't super strong, but it's strong enough to have that push upwards, which we can see confirmed in terms of the rest of the candles that followed. I definitely want to touch on the volume bars that you guys see down here at the bottom. So typically in a morning star, the volume may increase on the third candle, which we see here, and that correlates. And then of course the fourth one continue with higher volume as well. And this just confirms that the reversal is stronger because buyers are stepping in. Now the context of this is that a morning star is more reliable when it appears after a sustained downtrend. So we can see here, this wasn't a super sustained downtrend because it was very short. Again, you guys can see the double bottom here. That signal is also going to show you. But again, we're combining two signals in one. So in this case, the preceding candles are bearish, and this aligns with the required downtrend before a reversal, and we can see that here. Now, the market psychology behind this is that the pattern reflects a major shift, of course, with the third bullish candle representing a turnaround in the market sentiment because the bulls officially have taken over. And we can see the strong push upward, and this trend actually rose all the way up to the high for the day, which is at 191.52. So what this means for traders is that you can look for morning stars as signals to enter long positions, and you can anticipate an upward move after the pattern completes. Now, more moderate traders, they may wait for confirmation, and this can again appear after the third, fourth, or maybe even fifth candle, just depending on how strong the trend really is. And what this will allow you to do is pretty much make that break above the third candle before entering a trade to reduce any risk. So because this pattern offers a clear visual, which you guys can see here, the signal for me for a potential trend reversal is always going to be way stronger when I can combine it with two or more patterns in combination with indicators as well. So with that being said, these shifts in the market direction are going to show you those clear signals that it's time to either enter a trade or exit. But again, you have to combine it with multiple different ways to confirm this. I know sometimes these patterns can be pretty difficult to spot on the charts, but I hope it kind of correlates. I think essentially you guys can see how the strength of this trend essentially pushed the momentum all the way forward. And then you can see the volume also coincides with that because we can see the volume getting larger and larger. Specifically here, it almost tripled at the 1254 mark. Now again, the candle isn't super long in terms of the body's length. However, that volume is, so it continued to push the price even higher, further signaling, further confirming. So it's kind of repetitive, and I hope this does make sense to everyone. But again, this is going to be a reversal pattern that I definitely wanted to give more detail about. I hope it's pretty plain and simple now that I've fully broken everything down. But yeah, y'all let me know if y'all trade this signal. Okay, so the last thing I want to go over in this video is the optimal trading times, because I got a few questions about the best times that I like to trade. So I want to provide this illustration to outline the key trading periods throughout the day and the typical market behaviors within each time frame. Now, most of y'all already know I am in the state of Texas, so I'm on Central Standard Time. Therefore, the market opens for me at 8:30 a.m. So to offer a breakdown, from 8:30 a.m. to around 9 a.m., the market experiences high volatility, especially because this is the first 30 minutes, which is ideal for more experienced traders who can navigate sharp price movements. Now from 9 a.m. to around 11:30 a.m., this is considered prime time because price action becomes steadier and setups are more optimal for traders to enter and exit positions. As the day progresses, from 11:30 a.m. to around 2 p.m., this marks a period of consolidation where the market levels out and both volume and open interest can decline. Now, this isn't 100% every single time you would trade, but from time to time you will see a decline. But as you guys just saw, it's not always the case. So it's not 100% effective in terms of understanding this breakdown because, again, it can also offer different levels of volume and open interest during that lunch hour and period. I know some traders avoid it, but you can still be profitable during that lunch hour just because some trades will have a significant amount of volume just depending on what stock or ETF you're trading. Finally, from 2 p.m. to 3 p.m., this is referred to as power hour, and you'll see most of the volatility increases once again, and this leads to more pronounced market movements as the trading day comes to a close. So essentially, buyers and sellers are getting their last trades in for the day, so you'll see a higher level of momentum. So I wanted to provide this breakdown to help y'all strategically time your trades based on the market conditions throughout the day. So all in all, it's important to understand the sequence base of trading because this strategy can help improve your timing. And then of course you want to reduce any emotional decision making. So if you know exactly how to jump in and out of a trade, it reduces that or eliminates it altogether. And then also you can align your trades with the natural flow of the market activity based upon what you see on the charts and what you see in terms of the volatility. And with that, that'll pretty much do it for this video. As always, if you found this information to be helpful, feel free to let me know in the comments below. I thank y'all so much for watching and for the 1K subscribers. I really appreciate the love. So I'll see y'all in my next one.